Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing trade of the street today. Also, the way the day really panned out in terms of the sectoral moves and the stocks that were the buzzing most. Also, in terms of the way the experts are really deciphering the kind of market move that we are seeing right now, the pockets that can actually help you get higher returns in this kind of a volatile and a sideways kind of a market, and specific stocks that are in focus after the Q3 results and what should be your strategy post the Q3 earnings as well. That's going to be the entire focus of this show. So first up, let's quickly look at how the benchmark indices, the Nifty and the Sensex, are trading at as we begin the last half an hour of trade. Almost 0.4% of a decline is what you can spot. Although the markets are off the lowest point of the day, there's still a considerable decline that you can see. 80 points of a cut for the Nifty, 230 points gone for the Sensex. Looks like we are set for beginning the week on a lower note or in the red zone as well. 17,773 for the Nifty 50, 60,440 currently as the levels for the Sensex as well. It's a broad-based sell-off that you've been witnessing and a muted trade throughout the markets. In terms of the broader markets, the mid and the small caps also showing lackluster moves right now. They were showing about 1.3% of a cut in the morning trade, and that's what is continuing even now. So there's no sign of considerable recovery on the mid and the small caps as of yet. Look at the India VIX levels. That has seen a sharp jump, 6.7% uptick for that one, 13.6 as the current levels as well. So keep an eye out on the India VIX too. In terms of the sectoral indices, you're able to see only some bright spot coming in on the FMCG pack, but rest of the sectors are still hovering in the red zone, with the maximum decline coming in on the PSU banks, 2.2% of a cut for that one. Media stocks are trading lower too. IT stocks seeing a cut of 1.7% or 1.3% of a cut on the realty index as well. When you also see about a 0.5% cut for banks, autos, and also the metals pack, as well as when you see the pharma index and the realty pack. Those are the ones that are actually showing the declines as well, more than about 0.5% in trade today. In terms of the advanced decline ratio, the market breadth is favoring towards the declines, with 34 stocks in the red, with opposed to 16 stocks that are hovering up in the green. In terms of the other top losers today, of course, the Adani Group of stocks are again under pressure, with two-pronged news flows coming in. One, Moody's downgrading 4 of the Adani Group stocks, and second of all, Adani Group themselves reducing the growth outlook going forward from here. And right ahead of the Q3 earnings, you can see Adani Enterprises as the top loser on the Nifty index, 5.6% lower for that one. Adani Ports down by 5%. SBI, Infosys, HDFC Life, the other losers at this point in time. What's still holding up in this current market are some far and few between stocks, especially from the metals and the jewelry basket, and the watchmaker. Titan is up 2%, L&T up 2% as well, NTPC, Bajaj Auto, and Eicher Motors, some of the other gainers in trade as well. Time now to welcome our guest for the day. Mustafa Naddem joins in. He's from Epic Research. Welcome and thank you so much, Mr. Naddem, for taking the time out for this discussion. Well, first up, your view on how the markets are looking like at this point in time. We discussed last week where it looked like, the markets may be looking at fresh triggers after the budget, after the RBI. The earnings also largely now behind us. How are you looking at overall markets, and what would you really suggest investors to do? Looks like there is still an overhang of the Adani Group stocks.
Yes, the Adani factor is having a large bearing on the market, but overall, if you would see, the levels remain the same. The market has been trading in a close range, so that range is not yet broken. Again, I would suggest that the fresh selling, or say I would say the panic selling, would only come below 17,475 level. So till when we do not get a break below this level, we can see fresh longs coming up, and 18,000 is a crucial level for Nifty. So any closing above 18,000 would take market to significantly higher side. So I would say given the current status, those who are in long side should carry on their longs until and unless 17,475 is not broken.
Okay, understood that as well. There is another pocket that has been in news. We were discussing a little bit in the last week as well, and that is the new age tech stocks. A lot of them have started to report their earnings. I wanted to get your understanding of whether, are you now getting some more confidence? Is because of the tonality getting changed from the management, the efforts that they are doing constantly to now focus on profitability rather than burning cash flows, is that going to be a considerable structural shift for the new age tech stocks, and if not all, at least some of them as well. Let's take them one by one today. A whole host of numbers have come out. Let's start off with Zomato first. Zomato reported better than expected revenues that were in line with the and in line profitability as per the street estimates. The gross order value in food delivery was flat sequentially. There was a decline in the monthly transaction users as well. But overall, I wanted to understand from you, looking at the way margins improved a little bit to 5.1%. Blinkit's performance was somewhat encouraging with 18% sequential growth. Overall, how did you find the earnings of Zomato? And post the earnings, even though the stock has reacted to the bottom line numbers, 2.3% down right now. Is there anything in the numbers that gives you the confidence of looking at a fresh view on Zomato?
Yes, if you see result of Zomato, it's clearly visible that ex Blinkit it has turned operating in a positive zone. So this is a good sign. Like as we have discussed last week also, that these companies are now focusing more on turning operative profit and focusing on the sales number instead of burning cash to bring those numbers. So Zomato has also again launched Zomato Gold program, which is again a big plus because it was a good program. So I think Zomato would be continuing with good results coming forward, and the Blinkit would also add value to Zomato stock. And I see going forward, Zomato can trade to come to the level of 76. So
Okay.
I think investors can add Zomato stock at current level for a target of 76 going forward.
Okay, so investors looking to add Zomato at this point in time can do so for a target price of 76 coming in from Mr. Naddem. Let's now focus on PB Fintech as well. Now, the December quarter numbers here were strong as the premium throughput also increased over 70% on a year-on-year basis. It is said that it largely drove the 66% year-on-year jump in the revenue, and also EBITDA loss reduction to 133 crores versus 317 crores on a year-on-year basis. So considerable loss right there. Adjusted EBITDA margin improved in the existing and the new initiatives also to, if you see, like to 29% as of 6.1%, as the company now is beginning to focus on improving the productivity at the core insurance platform as well. Looking at the numbers of PB Fintech, does this company also give you the confidence like Zomato that it is now going to be focusing on profitability increase, and one can look at these levels as a fresh buying opportunity?
Yes, definitely. If you look at overall new age tech stocks, they are all now their focus is on delivery. So I think PB Fintech has again given a good numbers if you see performance. Although this performance is more on a credit, the revival on the credit side, but again, overall the company direction, the guidance is giving a lot of confidence, and I see level of 720, for PB stock in the coming time. So it's
Okay.
again a buy from my side, and given the company's guidance and turning on profitability, I think this level the company would be on a positive spiral.
Okay. Another new age tech company that delivered the Q3 earnings was Delhivery. Now, the December quarter revenue, however, came in lower than the street estimates. There was a delayed recovery at the partial truckload volumes that the company said. The management has clarified that this was due to the network footprint optimization and subdued volumes in the first few days of the December quarter, and also on account of the unseasonal rainfall right there. The management also has mentioned that it has been renegotiating the contracts with the low-paying clients such as PTL or in the PTL business as well, and this has resulted PTL yields to improve by 4.8% sequentially as well. Delivery, how do you really look at and analyze the company so far in the logistics space and the way the earnings have come out? How do you analyze the earnings, and therefore what strategy will you recommend to investors post Q3?
See, delivery stock for delivery, although the numbers are not so good, but it is totally dependent on the performance of how the e-commerce market is performing in India. And
Hmm.
what we see is currently the revival is there. The concerns for a very deep recession are now very less, and we the market is now talking about a very mild recession going forward. So
Hmm.
I think this would lead to more spending and revival of e-commerce sector. So overall, this would also help delivery stock in the future. So I think delivery stock, those who are holding can continue holding. Adding any fresh position is not advisable at current level. But yes, those who are holding can see some returns out of delivery going forward.
Okay. Not such a new age tech company, but one of the earliest internet companies that got listed on the Indian stock exchanges. Info Edge also came out with their numbers. So, one comment on that as well. Info Edge delivered strong revenue growth of 33% year on year, and this was led by the 40% growth in the recruitment vertical. The EBITDA margin also rose by 450 basis points Q on Q to 39% and thereabouts as well. And in the near term, however, the recruitment, the management also said that it is adversely impacted by the lower IT demand, but good medium term growth is expected in the recruitment as well, and that could help the company deliver higher revenues CAGR over FY23 to FY25. That is what the expectation is. How do you really analyze the earnings of Info Edge? And is this a company that you would be positive on? Although there's a 9.5% sharp fall, that we are seeing on Info Edge after the earnings. What is it that perhaps has not appealed to the street, and is that something that one should be concerned about as well?
Yes, see, Info Edge, although their portfolio is very strong, but what we have seen is the IT, the major recruiters, IT recruitment has slowed down usually. So this has resulted in the not so good numbers from Info Edge. But again, I would say their performance depends on the economic revival. And as we are seeing that there are again sign of revivals, not so strong, but yes, not so deep recession would be there. So IT would be the first sector to show the positiveness, and then the recruitment and everything would kickstart. So I think investor can hold Info Edge stock, but no fresh positions can be should be taken in Info Edge.
Okay, avoid taking fresh positions, but if you have Info Edge in your portfolio, you can continue to hold on as well, as things may settle down soon enough. Apart from the new age technologies, of course, the biggest IPO that we saw in history last year, and that is last year, that is LIC. It has been a lackluster performance from LIC right from the word go on the D street. But I wanted to ask you, from the earnings perspective, is there anything that looks promising to take a fresh look on LIC now? The analysts over here said that the multifold rise in the December quarter profit for LIC were largely as per expectations. There is also, trading on the undemanding valuation of FY24 P to EV of 0.63 times. But however, there have always been concerns of the company lacking any positive catalysts to take the stock price higher from here. And therefore, we are even seeing today that 2.2% of a decline is actually being able to see here as well. Although some of the brokerage houses have raised the targets, what is your own sense of LIC, and post the earnings, would you be looking at bullishly on this stock?
Yes, LIC has posted quite good numbers, like the multifold rise in profit is there, and it's always strong. Like people were thinking that Adani fiasco would have an major impact on LIC, although it has resulted in some considerable losses, but the portfolio is very huge, and I don't see any major impact going forward in LIC. So I think investors can look for some higher number. Although LIC is the stock which is not given some kind of like 20-30% return altogether, but those who are looking for a less risk type of investing can always look at stock of LIC, where they can see where they can expect a return of 5-7% from LIC stock. But although there are many other avenues where higher returns can be expected, so that's why I'm saying those who are more risk averse can look for investing in LIC stock.
All
It will.
right. All right, understood that as well. Mr. Nadeem, we've discussed 5 stocks and the target prices for all those companies post Q3 results and the way the investors should approach these stocks from New Age Basket on LIC as well and on Info Edge that you have shared. But like we have been discussing the Adani Group off and on, today also we've seen subdued, move on most of the Adani Group stocks. Some of them have actually seen 10% kind of a fall on Adani Enterprises, especially right ahead of the Q3 numbers. So last week we were seeing some buoyancy, some move on the upside, you have been saying that investors still have to look at this space cautiously as well. Post the developments of the weekend, today the kind of move that we have seen today, what does it really signify? The stock has been extremely volatile on Adani Enterprises, on Adani Ports, but overall speaking, what would your sense be now looking at the developments? Even today, we've also got the news reports suggesting that SEBI will now be updating the center on the investigations that are underway on the Adani Group stocks and the way the concerns have been raised from Hindenburg. The development continues on. What would your suggestion be to the investors now?
As we have been updating investors since last week that all is not over in Adani saga. The more is to continue, and investors should stay away for some more time from this stock till whole picture completes. And given, there are two aspects of it. The regulatory aspect is there, and also now company is focusing on reducing their capex and working more on getting the pledged shares back. So let this whole picture get completed, and then only Adani stock should be looked for further investing by investors. Till then, the clarity is not there. Investors should stay away from this.
Okay, understood that. One more pocket that I wanted to discuss before I take your own stock specific ideas for today that you would want to share with all our viewers, and that is the auto pack. Siam has released the January auto sales update for the entire auto sales basket. They have suggested in their report that passenger vehicles have actually seen a growth of 17% in the month of January, and passenger cars have seen a growth of 8%. Utility vehicles have seen the maximum growth of 28%, whereas two-wheelers have seen a 3.5% growth in the overall units that they have sold in the month of January. Does the kind of improvement that we have gradually seen in the auto space give you any confidence to look at adding aggressively any of the pockets from the auto space, be it the four-wheelers, the two-wheelers, or even auto ancillaries at this point in time? Where would you be more confident on?
Yes, the numbers released by Sense gives a good confidence in auto sector overall. And today, in fact, two of my picks are from auto sector only.
Okay, okay,
Bajaj Auto is on my radar, and it looks good about 3860 level for a target of 3950. So one of my pick today was Bajaj Auto. It
okay,
was bullish about 3860 level. So again, it is at 3755. So 3950 is the level which I see in Bajaj Auto, and above it can go to 4000 level.
okay,
Bajaj Auto. And my
okay,
second stock is Eicher Motor. It looks good about 3205 level for a target of 3290. So these are two of my picks for today. For because overall, what we have been seeing is the revival, the strong numbers from auto sector would support, and the passenger vehicle segment is also looking very good.
okay, okay. Understood that, Mr. Nadeem. So, two of the stocks from Auto Basket he has chosen as the top picks for today, and that's from the Auto Basket, Bajaj Auto and Eicher Motors. Both of these are also part of the top 5 gainers on the Nifty today. That's despite the overall weakness that you are seeing on the markets right here. Thank you very much, Mr. Nadeem, for being with us and sharing all the insights on various pockets of the markets that we've just discussed today. Quickly, let's look at how the markets are trading at this point. Of course, off the lowest point of the day, about a 250 point of a cut on the Sensex, 90 point of a fall for the Nifty as well. Looks like we are headed for a red close on and start this week on a lower note as well. But we'll keep an eye out on how the macros and the micros continue to impact the markets. And for tracking all of that news development, you should stick with us on Business Today TV. Also, stay with us via other social media platforms where we continue to give you all the buzzing action from D Street as well on Facebook, Twitter, LinkedIn, and Instagram. Many thanks for tuning in for now.